Good morning. You're watching DayBreak on Bloomberg Quint Live, and I'm Alex Matthew. First, let's look at the headlines this morning. Donald Trump and Kim Jong-un kick off their bilateral meet in Singapore with a handshake. Trump says he's confident that they'll share a terrific relationship. Asian markets open absolutely flat as investors turn focus on Sentosa Island Resort, where the two leaders are meeting. The government will sell 12.6% stake in public sector utility rights for little less than 500 crore rupees. And Fortis Healthcare's board defers its clearing of its financial statement till later in June, also extends the deadline for the final submission of bids. Let's turn to the big story. US President Donald Trump and North Korean leader Kim Jong-un arrived at the Capella Hotel in Singapore to hold talks over several issues. This is the first ever bilateral meeting between a sitting US president and North Korean leader. Now, the United States is seeking complete denuclearization from North Korea, while North Korea is seeking lifting of sanctions as well as normalization of ties with the US. Both the leaders exchanged pleasantries with a customary handshake to begin talks. Trump is also likely to address the media at 1:30 p.m. Indian time post the end of the summit. Now, minutes before the North Korean leader, President Donald Trump, this essentially happened, President Donald Trump essentially has tweeted about White House economic advisor Larry Kudlow suffering a heart attack. Trump tweeted that Kudlow, who has been working very hard on trade and economy, has just suffered a heart attack and is now at the Walter Reed Medical Center. All right, let's take a check on where the Asian markets are faring right now. Let's essentially talk about the early risers, because it's still about 7:02. Still too early to tell you what's happening in China and Hong Kong, though the first few ticks will be visible in just a few minutes. They've opened more or less flat. But they changed significantly. In fact, the Nikkei has run up since then, and so has the Australian benchmark. The Shanghai benchmark has opened with a few ticks in the green, and Hang Seng as well with a few ticks in the green. The Kospi has also recovered from early morning muted trade and is trading positive. Right, geopolitical tensions have triggered stock swings in recent weeks, but lately market volatility has ebbed as US share prices have steadily risen. Monday's advance comes as the S&P 500 has gained in 4 of the past 5 weeks. Abigail Doolittle of Bloomberg News wraps up Monday's Wall Street session in the US in this report.
Stocks rose ever so slightly in Monday's Wall Street session, with the Dow gaining on a fractional basis. The S&P 500 rose by about 0.1% and the Nasdaq climbed by about 0.2%. Haven bonds pulled back just slightly, as did the yen. And when you factor in the fact that the VIX was about flat, all of this tells us investors are not too concerned after that somewhat controversial G7 meeting or looking into the historic summit between the U.S. and North Korea. As for sector composition on the day, 7 of the 11 S&P 500 sectors did finish higher. Telecom near the top, utilities on the bottom. Now, for telecom, one of the top drivers there, AT&T, up about 1%. This ahead of a judge ruling on Tuesday as to whether or not AT&T can go through with its proposed merger with Time Warner. Looking at utilities, now rising bond yields did weigh on this space. That gives competition to their high dividends. But PG&E, a big laggard in this space, down about 4% after California did say the company was responsible for some of those wildfires that broke out last year. And the company disclosed they expect significant liabilities to be recorded in connection with those fires. Now, turning to healthcare, there were some pretty big movers there, including Boston Scientific, the medtech company, up about 8% on a Wall Street Journal report that Stryker, another medtech company, had approached the company about a possible deal. And Fitbit up about 15%, in part on positive comments from Citron Research's Andrew Left. But overall, stocks just slightly higher. Bonds and the yen down ever so slightly. Not a lot of risk appetite one way or the other in Monday's Wall Street session. From New York, Abigail Doolittle, Bloomberg News.
Now, understandably, in the Asian markets this morning, the big talking point is the meeting between Donald Trump and Kim Jong-un. Let's cut across to the network to find out the latest details there.
A material shift in the kind of nuclearization of North Korea. We've got to look at this as a long way downstream, as it were. This today, it's really about kind of presidential theater for both men. And we haven't really talked yet about kind of China and the sort of invisible hand of China that's kind of hovering. I talked about kind of John Bolton ready to burst in. Well, Xi Jinping may do the same.
Well, yeah, and on the issue of China, I mean, we saw a measured response, for putting it, I think, politely, from President Trump with regards to what he thought President Xi Jinping's role was in all of this, particularly about 2 weeks ago when that original meeting, when the meeting was postponed or canceled, because we've learned from talking to senior administration officials about the immigration issue along the North Korea-China border, and that the U.S. was not particularly satisfied with what President Xi had done with regards to that, not restricting that border enough. They would have liked to have seen him go further, but the president offering measured public comments to President Xi and saying that he was satisfied overall with how the Chinese have helped with this. That's on the one side, but on the other side of that, look at the tense back and forth bilateral trade negotiations that are happening with China and the United States. And quite frankly, the president and administration officials have tried to say that won't impact anything, but there are many back in the United States, Democrats and Republicans, who fear that the Chinese were using this summit as a potential political bargaining chip in the U.S. bilateral trade talks. And to your point very quickly on the political theater of it all, this was a very measured President Donald Trump in terms of the last 24 hours here in Singapore. In terms of North Korea leader Kim Jong-un, clearly he wanted to add some type of theater within the last 12 hours as he's touring the town. And we make light of it. But there was a sense of unpredictability that he was trying to forecast.
Confidence.
Or confidence that he was trying to forecast, not just to President Trump, but to everybody else watching, to the more than 2,500 journalists watching, taking a selfie with the foreign minister of Singapore, to a president who is known to, basically saying to President Trump, who transformed Twitter in these negotiations, hey, wait a minute, I'm the 30-something dictator who also is trying to forecast something as well.
Kevin, Richard, hang tight.
Yep.
We'll continue our conversation very shortly. Of course, Richard Fanning from Control Risk CEO and our White House correspondent Kevin Cirilli joining us. More to come. For now, Rish.
Yep, nice stuff. Thanks a lot for that, Hazza. Just going to have a look at what's happening, because don't forget our stock and trade quite literally is what's going on market-wise. And we were looking at a bit of a mixed bag. The Hong Kong markets opened a short while ago, Shanghai as well. Let's have a look at the action. David, what?
All right. Let's stick to what is happening, of course, in Singapore, and speak about the meeting between Donald Trump and Kim Jong-un. But of course, that's going to be a developing issue. Darshan Mehta, of course, is here to tell us all about how the markets are panning out for India. It started off being a little muted in Asia, but since then it's picked up, Darshan.
Yeah, so the Japanese markets have moved up to almost 0.4%. The SGX Nifty, which was trading in the negative, has come into the positive. So you're not seeing much as far as the SGX Nifty is concerned. Hong Kong still is muted. Now, if you're looking at how the trade setup is there, let's first take a look at the ADR. The Wipro ADR was up almost 1.5%. HDFC Bank did manage to react. Tata Motors has been doing well on the ADR side for the past few days. Infosys was flat in trade. On the other side, you had counters, which didn't move. ICICI Bank and Vedanta was unchanged, and Dr. Reddy's was slightly muted in trade. The SGX Nifty is absolutely flat in trade. It's just up 0.5 point. So no major cues coming in from the SGX Nifty at this point of time. Now let's take a look at the other factors which could influence trade. First of all, the Nifty was up almost 19 points, but it came off significantly from the highs of the day. The mid cap was ended in the red, and the small cap also managed to cool off. So, and this is from the highs of the day. The Nifty was up almost 70 to 80 points. The Nifty Bank ending flat. The PSU Bank also ending flat. So yesterday, despite a very, very strong start, the close was extremely weak for our markets. There were a couple of sectors that did well. Some of them didn't do well. Nifty Pharma continues its good run with most of the pharma companies gaining in trade. The media index also for the second day in a row has been doing well for itself. So these are the sectors that did well. What didn't do well were the high beta ones, the real estate and the metal pack, which were down in trade. So this is as per what the sectors have been indicating. On a month-to-date performance, Nifty Pharma continues to excel. The oil and auto index also doing well. Maruti playing an important role in why it's moving. And what's not doing well is the Nifty Bank, which is down in trade. The small cap and the infra stocks are not doing well in trade. Even on a YTD performance, the IT index continues to do well. The FMCG continues to do well. They have been outperforming the benchmark indices, indicating that money is again moving back into the defensives. And what is not doing well is basically the small cap, the mid cap, the real estate, the PSU bank. The high beta counters and the sectors are not doing well. And individually, some of the stocks have taken a beating much bigger than what the index has done. Now, basically, at a 52-week high, these are the counters that have reached a fresh 52-week high. DMart obviously crossing the 1 lakh crore mark. The Bajaj Finance twins doing extremely well. First Source is doing well. Infosys, Nestle above the 10,000 level in mark. UBL again, after a day's break, finally starting to move. And MNC pharma companies are doing well. Even VIP Industries has managed to inch up in trade. What is not doing well is quality, despite the promoters buying in the open market. The counter continues to grind lower. And PNB Housing was also down in trade because a couple of funds are looking to sell stake in the company. FIs were net sellers yesterday. They sold in 1,100 crores. DIs bought in pretty much the same level. On a month-to-date basis, DIs, FIs, both of them have been net buyers in the cash market. Now, if you're looking at the other factors, what contributed and what helped the Nifty contribute, basically it was Bajaj Finance. Maruti Suzuki of late has been contributing, but the problem still remains. Despite the FI limit being open, HDFC Bank does not contribute to the Nifty, so probably is losing steam, and that's not helping the Nifty at this point of time. Now, individually, if you look at what the FNO contribution is on the Nifty side, yesterday fresh long positions were taken. Open interest build up was 4% on the long side. Even if you're looking at the Nifty Bank position, the Nifty Bank was absolutely flat, but the open interest build up was 1.5% on the Nifty Bank. Now, if you're looking at where positions were taken, yesterday put writers became aggressive at 10,700 and 10,800. Pretty much we are at this level itself, and call writers had to shed positions in open interest. So put writers, so still I think the game is with the bulls at this point of time. If you're looking at where the total open interest is, we'll try to get that data, but these are the counters that are in the FNO band, no changes. Dewan Housing, Balrampur Chini and Jet Airways are the counters in the FNO band. Now, if you're looking at some of the stocks in PCR, obviously the Nifty PCR moved up since the market was rather robust. Even the Nifty Bank PCR moved up to levels from 0.80 to 0.89. Now, even individually, some of the stocks that you need to watch out for. Godrej Industries moved up yesterday on high open interest build up of 14%. So again, it's a momentum stock that you need to watch out for. Strides yesterday saw fresh shorts. Open interest build up was 9%. Despite it moving over the past few days, the counter overall continues to look rather weak. It's trading near its lifetime low. PC Jewelers again saw short covering that came in. Open interest was down 3%, and the counter managed to move up almost 7%. And finally, you had Castrol India, which saw fresh short positions. Open interest build up of 10%. Ever since over the past few days, Castrol has been sliding steadily on or downwards over the past few days. So that's what we're hearing, Alex.
All right. Thanks so much for that, Darshan. Let's take a quick check on the rupee and the bond market now. The Indian rupee on Monday strengthened marginally against the US dollar ahead of key domestic as well as global events this week. The home currency ended at 67.43 or 67 rupees and 43 paise against the US dollar, up about 0.1% from its previous close. On the domestic front, market participants will be keeping an eye on inflation and industrial production data that will come out later today. According to the Bloomberg poll, expectation is that inflation for May could rise to 4.8% compared with 4.5% in the previous month. Now, the 10-year bond yield ended at 7.962, and that's a change from, or barely a change rather, from Friday's close of 7.947%. Let's take a check on the commodity space now, and Jayesh Kilnani joins in with all the updates. Jayesh, again, another petrol and diesel cut today. Crude in focus, I'm sure.
That's right, Alex. In fact, crude is trading flat after a 0.5% surge that we saw for in the overnight session. Now, we understand that Iraq has, told OPEC members that they should resist pressure to increase the oil output. And also, we understand that as per a Bloomberg survey, the oil inventory is likely to drop as much as 1.5 million barrels for last week. As far as base metals are concerned, most of the base metals closed mixed, but the index itself declined for a second day in a row. The zinc inventory that actually climbed to the highest level since Feb 2017, and we had copper premium, which also came in at the highest level since 2014 as per a Bloomberg survey. Now, as far as individual base metals are concerned, aluminium and lead closed positive, while we had copper, zinc, nickel and tin which closed negative. But remember that none of these base metals made a more than 1% move in either direction. And if you have a look at the Shanghai Futures Exchange, these base metals are in fact trading on a mixed note as well. As far as precious metals are concerned, gold is trading steady above the 1300 mark as the dollar index has now strengthened for the third straight day.
Thank you so much for that, Jayesh. Let's move on now and speak about the big brokerage calls of the day. Somit Sarkar is here with a couple to tell you about. Morning, Somit.
Morning, Alex. And the big brokerage calls for the day. First we have is HSBC on GAIL India. Now, the brokerage has maintained its hold rating on the stock but has raised the target price to 355 for GAIL India from 325. Now, according to the brokerage, improving transmission profitability, lower US LNG contract risk and rising petchem volumes are the positive when it comes to GAIL India. Now, the brokerage is expecting the capacity utilization levels for both the transmission business and the petchem business to rise going forward. Along with this, higher oil prices and a relatively subdued gas prices in the US is reducing the US LNG contract risk for the company, according to the brokerage. Now, going forward, the next trigger for GAIL India will be PNGRB's decision on the unified tariff. However, the progress on this front is a bit slow, according to the brokerage. Lastly, the brokerage has raised its FY19 and FY20 earnings estimate by 8% each to factor in higher petchem realization, higher LPG volumes and higher gas trading profits. Second we have is Nomura on Dr. Reddy's. Now, the brokerage has maintained its buy rating with a target price of 2,704 rupees. Now, according to the brokerage, Suboxone launch is expected to be in the near term, as an early launch can act as an positive catalyst for the company. But the brokerage is expecting the competitive intensity to be low initially for this product, which could then rise over the time. Now, the competitive landscape is likely to be limited over the next 3 years, according to the brokerage. Now, Nomura is expecting the annualized EPS impact to be at around 62.5 rupees with no additional competition. However, with competition intensifying, the EPS impact could go as low as 2.5 rupees per share, according to the brokerage.
All right, thanks so much for that, Somit. Let's move on and speak about the stocks in news, the ones that you have to pay attention for in today's session. Shraddha Babla has an entire list to tell you about. Morning, Shraddha.
Morning, Alex. First on my list is Usha Martin, where the board approval has come in, and this is to explore the sale of their steel business to de-leverage the balance sheet. In fact, the board has formed a committee of independent directors, and they will be looking at appointing investment bankers, consultants and advisors to help evaluate various proposals. So this is just at the exploratory stage. Welspun Corp, which has received yet another order. Yesterday they had an order and yet another order for pipes and oil. For pipes for oil and gas, this is for a project in America. Now, the order worth is about 400 crores, and with that, the company's current order book increases to about 11,400 crores. You have KDTL Limited, which could react positively. They will raise the FPI limit to 49%, and they're also looking to raise about 30 crores by equity, so watch out for that name. Strides Sassoon is another one. They have received a US FDA final approval for generic Tamiflu capsules, now which had the US market size for these capsules was about $725 million. So it's a reasonably sized drug for Strides, which doesn't have a very large US presence. So watch out for that name. Hotel Leela Ventures, they will issue 125 crores equity shares to JM Financial Asset Reconstruction Company. Now this is on account of conversion of debt into equity. So that's another one to watch out for. DCM Shriram, they will consider a buyback option on 18th of June in their board meeting. And lastly, in insider trades which were reported as of June 11th, you have Lincoln Pharma, where the promoter has acquired 50,000 shares on 8th of June. So they've upped their stake by about 0.25%. So these are some of the names to watch out for.
All right, thanks so much for that, Shraddha. Now, there are several stocks that Shraddha spoke about. If you missed any of them, you can check out this copy or story on the website called Stocks in News, and you'll be prepared for essentially everything that you have to watch out for in trade today. You'll also find several other stories on the website. Here are just a few of them. So, In updates on the Tata Group, Jaguar Land Rover, that is owned by Tata Motors, plans to create a new factory platform at its Solihull plant that will enable the production of cars in electric, gasoline and diesel versions. To facilitate this, it is moving all production of its Land Rover Discovery SUV to Slovakia. Fortis Healthcare has said its board has again deferred approval of quarterly and annual financial results for the period ended March 2018. It's saying that more time is needed to consider the aspects of the outcome of an internal investigation on alleged financial irregularities. And in news on banks, Rana Kapoor is seeking shareholder approval for another term as Chief Executive Officer of Yes Bank. Now, in the context of the meeting between Donald Trump and Kim Jong-un, here's a special story on North Korea. In the year 1989, North Koreans were twice as wealthy compared to their Chinese counterparts. 3 decades later, the fortunes have reversed. Here's how.
After the end of the Korean War, North Korea was a virtually cashless society. Everyone worked for the state and was provided for by the state. And in the communist bloc context of the day, it worked. In 1989, North Koreans were more than twice as wealthy as their comrades in China.
Now we think of them as a hermit kingdom and not trading very much.
William Brown spent his career analyzing North Korea for the CIA.
But actually they were integrated reasonably well into the Soviet planned system of countries.
The loss of support from the Soviet Union after its collapse in 1991 and a series of droughts and floods led to a great famine in North Korea.
The famine pretty much ended the public distribution system in which the North Korean state fed everybody through the ration system. And the government couldn't supply food, so people launched off on their own.
Since then, a strange hybrid economy has emerged. Part government-controlled, where rations are allocated by the state, and part gray market, where currency is earned in the market economy. For example, a textile worker in the state-run Pyongyang textile mill earns around 3,000 won per month, which has a street value of about 40 cents. But that worker pays nothing for housing or utilities and receives food rations. Her sister might legally work for an export-oriented company. She's allowed to get 30,000 won per month, but with fewer perks. Another sister could work for a Chinese company and earn 300,000 won per month, but with 0 perks from the government.
All the state workers get paid through this incredibly low wage system and are dependent on rations that often don't show up. The ideal situation is for one person in a family to work in the state system, and then other people in the family work out in the marketplace and earn real money.
It is a highly inefficient system. In per capita income terms, North Koreans are now 8 times poorer than Chinese and over 20 times as poor as South Koreans. Rather than reform, the government sought to fill a shortfall in hard currency by trafficking illegal goods abroad. According to numerous reports, this illegal business is run by an agency known as Office 39.
It's an office that's organized principally to raise U.S. dollars for the ruling Kim party.
A study from a Washington-based human rights group traces the regime's criminal ventures back to the 1970s, when about a dozen North Korean diplomats were expelled from Scandinavian countries for smuggling alcohol, cigarettes, and hashish. Later, the government switched to foreign organized crime syndicates to sell things like counterfeit pharmaceuticals and heroin manufactured from state-mandated poppy farms. North Korea's government has dismissed such claims, and some analysts have also questioned the data. Since 2005, intercepts of North Korean smuggling have fallen sharply, though more recently claims of cyber theft have proliferated. Meanwhile, Kim Jong-un has started speaking to South Korea about opening up for investment in restricted economic zones, and he's also talking about switching to a more China-like economic system. Whether that's a true change of heart or just a tactical retreat in the face of sanctions remains to be seen.
Well, if you've experienced Mumbai's traffic, then you'll be praying that this actually comes to pass. Flying cars could soon be a reality. Bloomberg's Brad Stone explains what will go into making them and describes the companies making them, including Volvo, Airbus and Uber.
No, it's not a scene from The Fifth Element or Star Wars. Flying cars, they're suddenly very real. German company eVolo has a flying car with room for two. Airbus is developing a single-person autonomous flight vehicle. Chinese drone company eHang is attempting to get its taxi flight drone in the air as soon as federal regulations will allow it. It can fly over 11,000 feet. And Uber predicts urban air taxis will be roaming the skies in 10 years and has even partnered with NASA to develop new traffic concepts and skyports.
We make big, bold bets. You know, that's part of the identity of the company.
The company's vision for the network, dubbed Uber Air, would let customers push a button and get high-speed flight in and around cities. And another flying car company just announced its latest aircraft. The Kitty Hawk Flyer, funded by Google co-founder Larry Page, sports 10 battery-powered propellers and 2 control sticks, and looks like something out of Star Wars. At first, it'll go 20 miles per hour and fly up to 10 feet in the air, all without the need for a pilot's license.
We computerize the system so that every person can learn how to fly in 5 minutes.
No word yet on when the Flyer will go on sale or how much it will cost. Kitty Hawk is also working on another aircraft called Cora. All in all, at least a dozen companies around the world are pursuing the sci-fi dream of personal aircraft to help you avoid congested highways. But are we in need of a reality check? To put flying cars in the sky, we'll need a new automated air traffic control system, years of safety tests, and cultural acceptance with the idea that these new vehicles could be landing right next door. Brad Stone, Bloomberg News, San Francisco.
But you see crows now, maybe in the future you'll see flying cars. Who knows? Well, that's all we have for you on Daybreak. Up next is All You Need to Know. Do stay tuned. This is Bloomberg Quint.